That's weird. All right. So, just nothing. Down 17 points on the day, pretty flat. It should help realized vol come down a little bit. Definitely some reduced variance this week. We've just continued to trade flat on ES for, well, I guess within like a $3 range on ES for the last almost 3 days now. Um, Retail sales tomorrow has the potential to move some shit around, but otherwise, nothing interesting happening. Dollar climbed up a tiny bit today, and on the slight increase in inflation expectations, but yields at the top end of the curve mostly down. Not quickly, but still falling a little. Commodities pretty flat. Not too much of a change in oil. Gold moved back up a little, but that was about it. Correlation starting to turn back around. So today I actually saw a bit of a breakdown in both 1 and 3 month dispersion, which is kind of interesting. You would think that dispersion would pick up into a little bit into retail sales, but yes, SLD does start tomorrow, and margins are probably pretty thin right now. So there is a chance that the supplemental liquidity deposits will need to be well, there's a chance they'll be quite large, I guess. Looks like leverage on the carry fell a little bit. Fell on the short end of that as well, but we continued to see a decline in the forward yield on volatility down to 17.92% here going into close. So still volatility crushing out. The VIX and VIX 3 month both falling back. Not so much on VX, but a little bit. Tomorrow's the VIX expiration, so we might see more significant moves in volatility following tomorrow, especially if people are going to jump back in and pile into a long vol. Um, yeah, correlation turned around on the 3 month, but again, I don't think we got enough of a move in bonds to really pick up volatility there. Looks like out of the money put demand was still falling yesterday. We'll see if that continues. That might actually flatten out given the turnaround that we saw in correlation. Um, ooh, was that a decline? That is our first day over day decline in quite some time here on the VIX cash VIX VX correlation. Fell from 98.04 to 97.39, which isn't very significant, and still shows that there's a significant amount of fear in selling large quantities of short vol. VIX very much still in backwardation with the futures contract. Although it does look like bets are that volatility will fall into June, before rising into September, and then falling into the rest of the year. But even the low end in the curve down here in June is at 20. So very likely the rest of this year, this is relative to the rest of the curve. 25 is kind of low for vol. We're not pricing in anything much too much lower than that right now. Um, a little bit more breadth picked up yesterday. Now about 30% of the S&P above its 20-day moving average, but definitely not the majority of it. Fed fund futures pulled back a little, but still roughly around 2 rate cuts by September, and it looks like the 10 2-year spread closed a little, about down about 7%, but not very significant. Out here on the technical side, yesterday's high held, which is the start of a rejection. And today, instead of closing above 5402, we closed below it, which could also be fairly significant. Remember that 5402 is the low from last August, back in 2024, and definitely a significant level both for bullish positioning, and then also, in order to entice systematic buyers, closes above this level would obviously be more beneficial. The EMA 30 is getting fairly close to spot. It's up here at around 55.37, just a little bit above where delta neutral is. So far, we've not tested either of those things, which is, if this does actually turn into a larger rejection, and we see a downside test around like 53.25 or 52.64 over the coming days, that opens up the likelihood for a return back to 51.19, where we could confirm additional downside. So this does it's consolidating for now, but it's not consolidating in a way that looks particularly bullish. This is also the second day of the death cross on the daily, with the 50 MA now below the 200 MA, which is like a sell side systematic signal. It's arguably not that important, but it does represent a significant change in market behavior over time, and is usually indicative of a bear market. So, um, it's probably not driving a lot of decision making, but it does drive some. And that's about it. So we'll see what happens with retail sales in the morning. Could be a little bit spicy, especially if it misses. Right now, the expectation is that people went out and bought a lot of cars to get out ahead of the tariffs, but I think maybe people didn't buy as many cars as expected, given that consumer debt continued to fall over the last like two reports, and then also interest rates are not in a very beneficial place, which probably disincentivizes the car buying that people are predicting would have occurred. So I think there's a very good chance that analysts are a little bit off base on that one. And if retail sales does miss, that's going to confirm the negative sentiment that we've been seeing, and could act as a little bit of a catalyst to the downside. I don't think it's going to be huge or anything, but volatility is wound tightly enough that it could be fairly impactful. Anyway, thank you all for tuning in, and I will see you guys bright and early tomorrow. Have a good night, guys. Later.